All right, let's dive into one of the biggest stories in Australian finance right now, the absolute explosion of exchange-traded funds, or ETFs. If you're an investor or even just a little curious about where the market is headed, you really need to get what's going on here. So let's get right into it.
I want to start with just one number, a really, really big one, $280.5 billion. Just think about that for a second.
So that massive number, that's the total value of Australia's entire ETF market as of right now. And get this, it represents a jump of 36.1% in just the last 12 months. I mean, that's not just steady growth. That is a fundamental shift in how people are investing. ETFs have officially gone from being this kind of niche product for in-the-know investors to a total mainstream force. So, naturally, the big question is, why? Right? What is fueling this incredible boom? Well, the why of it all really boils down to four key things. First, they are just so cost efficient, way cheaper than old school funds. Second, access. It's never been easier to buy them. Third, there's been this huge wave of innovation, ETFs for everything from AI to cybersecurity. And finally, financial advisors, they're all in, making them a core part of their strategies for clients. It's just the perfect storm for growth. Okay, now let's get to the really juicy part. Where have the biggest returns been this year? What are the themes that are getting investors really excited? And the numbers here are, well, they're pretty wild. Defense ETFs have just been on a tear, up a massive 48% so far this year, mostly driven by what's happening globally. Platinum has also had an incredible run, up almost 24%. And then, of course, you can't ignore the Bitcoin ETFs. Now, it's a 12-month figure, but they've posted these insane returns of 70 to 90%. We're talking about some seriously powerful trends here. But with those kinds of huge returns, you've got to be careful, right? And this quote here really hits the nail on the head. It is so tempting to just chase these high-flying themes, but a smart strategy is always about balance and managing your risk. It's not just about what you buy, it's about how it all fits together. Okay, so we've seen the top performers, the high flyers, but where is the bulk of the money going? Let's zoom out and look at the bigger picture to see where billions in new cash are actually flowing. No big surprise. The largest chunks are going into broad global and Aussie equities, the core building blocks for most people. But what's really fascinating is seeing all this renewed interest in fixed income now that interest rates are stabilizing. It shows you that investors are thinking long-term and building out properly diversified positions. And this right here tells a really powerful story. You've got money pouring into assets like stocks and bonds, while it's flowing out of cash ETFs at a record pace. The message couldn't be clearer. Investors are taking their money off the sidelines and putting it back to work in the market. So all this action has obviously sparked a ton of questions from people trying to figure this all out. So for this next section, we're just going to tackle some of the most common ones we hear head on. Let's start with the big one, the most fundamental question of all. With all this hype, are ETFs actually a good investment for you right now? The short answer is yes, for some pretty simple reasons. The fees are low, the returns can be strong, as we've seen, and you get instant diversification. But, and this is a really big but, the right ETF for you has to be matched to your personal goals and how much risk you're actually comfortable with. It's not one size fits all.
Of course, it can't all be good news, right? No investment is without risk. So what are the actual downsides you need to be aware of here?
Well, the main one is just good old-fashioned market risk. I mean, even though an ETF holds a bunch of different stocks, it's still going to go up and down with the overall market. And it is so important to remember that those super exciting thematic ETFs we looked at earlier, they can be way more of a roller coaster than a simple broad market fund. Next up is a question we get all the time. What is the actual difference between an active and a passive ETF? It sounds complicated, but it's actually pretty simple. So think of it like this. A passive ETF is basically on autopilot. It just tracks an index like the ASX 200 and does what it does. That's why the fees are so low.
An active ETF has a human pilot, a fund manager who is actively making decisions trying to beat the market. Both can be useful, it just depends on your strategy.
Okay, this one's for the huge number of Aussies out there with a self-managed super fund. A big question is, can you actually use ETFs in your SMSF? Oh, 100%, absolutely. In fact, ETFs are a huge favorite among SMSF trustees, and it's because they're such a simple and low-cost way to get diversified across global markets, different asset classes, you name it, all while staying compliant. It's a perfect fit. Okay, for our last section, let's just quickly touch on something a little more advanced. Let's talk about how ETFs can be used in some pretty sophisticated tax strategies, especially if you're a high-income earner. Look, we're not going to get deep in the weeds here, because it can get complex. But here's the main idea. You can use ETFs in some really powerful ways to be more tax efficient. For instance, holding them in an investment bond can cap the tax. You can use them in a debt recycling strategy to help make debt tax deductible. Or you can hold them in special accounts that help minimize capital gains. It's all about making a smart investment even smarter. So when you put all of this together, what's the big picture takeaway? It's that ETFs aren't just a simple investment product anymore. They have become this incredibly powerful and flexible tool, really a core component for any modern investor. And that really leaves us with one final and I think crucial question for you to think about. The ETF revolution is clearly here. It's happening right now. The only question is your portfolio ready for it?